U.S. companies added 38,000 jobs in May, the slowest pace in more than 5 years. Revisions showed employers added a combined 59,000 fewer jobs in April and March than previously estimated. The unemployment rate fell to 4.7% in May from 5% in April as fewer people looked for work. Here with analysis on how the jobs report may be interpreted at the Fed is Wall Street Journal chief economics correspondent John Hilsenrath in our Washington bureau. Morning, John. What is your take on these jobs numbers?
Well, they were certainly disappointing. The analysts on Wall Street were expecting payrolls for the month to be closer to 160,000. And that was accounting for a strike at Verizon, which was holding payrolls down to begin with. So this was a very soft number. You know, the Fed is in terms of how the Fed is looking at this, Fed officials have been looking to move rates up in June, more likely in July. Because these numbers were so weak, June looks highly unlikely, and it diminishes the probability of a July move. We basically have to see some real improvement in some of these data over the next month or two to get the Fed to move rates again. They moved them up in December, and they've been basically in a standstill ever since.
So you don't believe a summer rate increase is totally off the table, do you?
No. No, it's not off the table because, you know, we've seen little downdrafts like this in the past. It's not at all unusual to see some downdrafts in the economic data. And there are a lot of reasons to think that the economy's got some momentum behind it. You know, the housing sector, because of low interest rates, is doing fairly well. Households, because of low gasoline prices, have more disposable income than they had, and we've seen that in some of the consumption data. The dollar is weakened a little bit, which ought to help the trade picture. Fiscal policy isn't as constrictive as it used to be. So the forecast at the Fed is that growth would pick up and that they'd be in a position to move rates up again. If we see some confirmation of that, then we could get a move as early as July. But the bar just got higher today.
John, I want to go back to what you mentioned earlier, the Verizon strike. Around 31,500 workers went on strike last month. And as you said, those numbers were reflected in the jobs numbers. But Verizon recently struck a deal to return workers to their jobs. So how much does something like this factor into the bigger economic picture?
Well, so let's just say that strike never happened. Then you've got another 30,000 people on the payroll number. That still gets us to about 65, 70,000. You know, so Janet Yellen has said in the past that we need to be producing around 100,000 jobs a month just to absorb new entrants into the labor force. So this falls below that mark. And what the Fed is going to want to see is some confirmation that we're somewhere above that 100,000 mark. We don't need to be doing 200,000 jobs a month, which we have been for a lot of this expansion. Somewhere in the 130, 40, 50,000 jobs a month ought to be enough. But what we got in May wasn't enough. And we just have to wait and see now if that was a blip or a real downtrend.
So what will you be looking for then in the June report? And is there usually a summer slump?
Well, you know, the Labor Department they do these seasonal adjustments to their data, which are supposed to account for slumps in these numbers. For instance, you know, come June, a lot of teachers are off work. They're on summer vacation. Seasonal adjustments ought to account for that. But these seasonal adjustments are also very quirky and they can be unreliable, which is why, you know, we kind of want to see how the numbers play out over several months rather than putting too much weight on any one month. You know, it's also important to remember we can't just look at the jobs data. We have to look at a lot of other factors. We have to look at consumption numbers. Are Americans still, you know, are they spending money? The trade picture, have imports really been hit by the strengthening of the dollar that we saw last year? Is a slow global economy hurting exports? Those factors all matter. You know, one of the things that I thought was a little puzzling in today's jobs numbers is, and one reason why I'm a little suspicious is that the employment in the construction sector was pretty soft. And, you know, home building has been doing pretty well. Commercial real estate has been doing pretty well. I expected to see a little bit more life in that part of the economy than we got in these numbers. So maybe there's something quirky that's going to unwind itself.
Yeah, there might be some revisions there. All right. Thank you, John, for that.
Okay.